Hello, hello. Okay. Good morning, everyone. Welcome to the final day of the North American Bitcoin Conference. And thank you for joining our chat entitled Bringing Crypto to the Next 1 Billion People. My name is Ornella Hernandez, and I'm a news writer at Cointelegraph based here in Miami. And I'm pleased to have next to me Ram Ahluwalia, who leads the digital assets and crypto business at CrossRiver Bank. Ram is the founder of PeerIQ, a data and analytics fintech, which he exited to join CrossRiver last year. Prior to finding PeerIQ, Ram was an SVP at Bank of America Merrill Lynch, where he was an operating executive and member of the leadership team responsible for U.S. consumer and small business credit. And Ram started his career in management consulting and is a CFA charter holder.
Sounds really boring, by the way. It's like we're trying to blow up TradFi, and I'm TradFi sitting on stage right here. Sorry, go ahead.
Well, for the next 15 minutes, we're going to discuss a range of topics from financial services, the Metaverse, and NFTs. And I want all of you to keep in mind the question, how can a bank approach these opportunities and lead crypto adoption? So, Ram, can we start by telling the audience a bit more about CrossRiver, please?
Sure. So CrossRiver is really an extraordinary business. CrossRiver is a digital infrastructure bank. So we're a B2B2C company. We power leading crypto companies like Coinbase, eToro, other payment providers like Stripe and Plaid, I'm sure you've heard of. And if you're an entrepreneur building a crypto exchange or an asset manager, CrossRiver is the ideal partner to help you deliver crypto offerings using our technology and bank charter. We were the first bank to open crypto bank accounts, and Coinbase was our first customer. We provide the fiat ramps for Coinbase and others, and we have a lot of ambitions in crypto. So there's a role for a bank to be the bridge between TradFi, so Fintechs, neobanks, community banks, asset managers, and crypto on the other, meaning crypto protocols, the NFT category, metaverses. These two worlds want to talk to each other. They want to move money between each other. They want to lend to each other. And you need a bank to be a bridge, and it's our aspiration to play that role.
Okay. And let's talk a bit more about the traditional finance. So Square recently rebranded to Block, and MasterCard acquired CipherTrace, and these are just a couple of examples reacting to crypto. So how else do you see TradFi evolving?
Right. So the institutions are here. For so many years, if you've been in crypto for a while, it's always been around, the institutions are coming, and you can't open a newspaper or CNBC or a Discord channel or crypto Twitter and there's a headline of some major financial institution embracing crypto. It's true for all the payments providers. Visa, MasterCard bought a company called CipherTrace. Visa is engaging in NFTs and payments. It's true for the top 10 banks globally, whether they're public about it or not. It's true for asset managers. And if you look around the world, it's a zero interest rate economy. If you go to your local bank, you earn 0.05% in interest. And institutions and customers are saying, gee, I can get real yield online. I can access assets that I can't find through their financial advisor. So I think what's changed in the last year or so is that the CYA decision, do you guys know what CYA is? CYA is a technical term for cover your ass. And prior to last year, the CYA decision was, don't touch crypto, you're going to lose your job. Now it's, how do we become crypto relevant? How do we reimagine how we deliver our products and services to our customers in a crypto-first way?
And how else are fintechs and neobanks viewing crypto and blockchain right now?
Right, so you might have seen Current. Current's a fintech. They offer 4% yield to their customers. I'm trying to dig into more how they do that. I believe they're funding through DeFi. That's the future, right? So if you want yield at a bank, how do you do it? You can't. Goldman Sachs Marcus launched a high-yield savings product a few years ago. It only yields 50.5% today. It's nothing, especially when you have 8% year-over-year inflation. So what the fintechs are doing, and this is called the DeFi mullet, and the idea is the fintechs and the neobanks on the front end, they own the customer experience, they have the branding, and on the back end, they're generating the yield by interacting with DeFi protocols.
Should we cue to the next slide? Okay. So now if we look beyond the financial services and we look at crypto's impact from the metaverse, how do you think things will change when it comes to these other sectors? So the metaverse, NFTs, gaming.
Yeah, there's a lot to go through here. The metaverse is extraordinarily interesting. For New Year's Eve, some of our team was hanging out on the metaverse, actually in the digital version of Times Square. And the way I think about the metaverse is it's full of digital art galleries, shopping malls, single-family homes, and we call that, from a bank perspective, commercial real estate, single-family residential, multifamily. And what do banks do? Banks finance real estate. We create liquidity. You're also seeing the metaverse rentals of these assets out. And that's really exciting. So our aspiration is to be the first bank to finance these digital assets to create more liquidity in the metaverse. And as you know, there are dozens of metaverses now, and I think we're just getting started. It's very exciting. On the NFT category, there's so much to do in NFTs. There's been a lot of discussion at this conference around digital NFTs, as you know. But one of the original concepts around NFTs were, how do you put a real-world asset on chain, like a home? One of the co-founders of TechCrunch, Michael Arrington, sold his apartment and bought another apartment via an NFT. It makes sense to take all the cumbersome headache around buying and selling real estate and put that on chain. So that's an incredible opportunity. I think for the creator economy, it's extraordinary as well, right? If you're a creator, you're a producer, you create, let's say, music, you really don't capture most of the economics from your work. It gets paid out to distributors and record labels and other intermediaries that are clipping fees for providing that service. Now with the NFTs, you have direct engagement with the audience. You can provide access, exclusive content, and even more importantly, as a creator, you can capture value from the secondary sales of the transactions, meaning every time someone clicks a song, you get paid, or someone licenses the royalty, they can interact with a smart contract, creator gets paid. So it's putting more power and control in the hands of the creator, and also the community around the creator, the users, which is extraordinarily exciting. So that means we should get even more, creativity. The other categories around gaming, I'm sure we've seen Axie Infinity. We're just getting started around reimagining how gaming evolves. Gaming is a $200 billion industry. It's much bigger than the Hollywood entertainment filmmaking category. And I saw a statistic that 65% of millennials spend time online virtually in the metaverse or in gaming. And now, of course, with gaming, you have property rights to your characters, your avatars, your tools, and you can build a digital economy, around gaming. And I think once you go through that door, it's a ratchet. You don't want to play World of Warcraft again, knowing that when you shut down your computer or delete your hard drive, or that you lose, your assets. So I think it's really exciting. In the Philippines, there are individuals that are earning an income and a living by playing a game called Axie Infinity, and even their local version of Craigslist, they're denominating goods and services in the unit of account of Axie Infinity. So it's really exciting space, but happy to drill down anywhere you want.
Yeah, and then what are you personally most excited about to see if we take it back to NFTs?
I'm most excited about, a second?
Like the next trend that you are personally most excited about when it comes to NFTs?
I'm really excited about crypto blockchain gaming. I think of all these categories, and they all interact, right? So if you have an NFT that you've acquired from a game, you can express that in a metaverse that could be financed through a DeFi protocol. So all these things interact, which is one of the powerful ideas behind crypto of composability and primitives and being able to build off of the open source technology of others. But I think crypto blockchain gaming is really going to be extraordinary. There is a generational component to it, right? How many of us have kids or nieces or nephews that are on Roblox for many, many hours a week? And digital content creators that are on TikTok. I saw that TikTok is now the #1 most trafficked site. The gamification of these everyday experiences is just in the early days. So the blockchain technology is being built now by players like Dapper Labs and the Flow blockchain and others. So yeah, I'm very excited about that. The gamification of investing, Robinhood's doing that in the TradFi world. That's going to happen in the crypto world too. So I think we're just getting started.
All right. And then what do you think are some of the main challenges to bringing crypto to the next 1 billion people?
It's a great question. There's so many challenges. Like anyone that's used a MetaMask account knows how painful the experience is. You have to interact with a smart contract, and there's always the risk of a man in the middle of attack, or your browser being hacked, or you're signing a contract that is malicious in nature, or maybe it's not malicious, but there's some faulty code and you get rug pulled. So it's not an ideal experience to expand it to 1 billion people. It's the crypto native crowd, folks in this room and others that are living in Discord and Twitter that are engaging. So what do you need? You need more usability. You need cleaner, easier to use experiences where the end user doesn't have to know how the blockchain works. They don't have to know what digital signing a smart contract is. You need to have tools that create trust. Imagine if you're interacting with MetaMask and it would give you an insight as to the rating or the quality of the protocol, and some commenting and review systems, and there are other kinds of controls you can create around this to build more safety and trust. I think the other thing you need is we need more women in crypto too, right? We need a lot more women in crypto. So my sister's the one that red-pilled me, actually, 5 or 6 years ago, and she's been in crypto a long time. So anyway, we need more diversity in general in crypto to bring the next billion people. We also need more regulatory clarity. It's very difficult if you're an entrepreneur and you're wondering, hey, if I launch this decentralized algorithm on the blockchain, is the SEC going to come after me? Or is the IRS going to come after me if I receive an airdrop token and I don't disclose it in my tax forms? So that lack of regulatory clarity creates uncertainty, and it limits action and willingness to lean in and be creative.
Totally. And then how else do you think we can better educate audiences and grant them more access to educational tools?
So we need more industry advocacy. It's great to see, like in the midterms, that you're seeing somewhat of a more bipartisan approach to crypto, although it is tilting, in some directions more than others. But you need to engage with your elected officials. You need to make it a core issue. You need to lead with the principles of economic sovereignty and financial inclusion and enabling access to credit. If you're a merchant that accepts a credit card, you're paying 2 to 3% to banks and the Visa, MasterCards of the world. And merchants have a net profit margin of 1%. They're essentially living paycheck to paycheck. In a scenario like COVID happens, recession, a lot of jobs are lost. So crypto is it's a noble purpose. It takes friction, costs out of the systems, can help the economy grow, and there's a lot of opportunity around that. So industry advocacy is number one. Second, we need to move TradFi on-chain. So I'm like the ultimate TradFi guy who was red-pilled, saw through the matrix, saw the red dragon of TradFi, and pumpernickel on the other side. So we got to go through that bridge, we got to go through that journey and make sure that we can move banking on-chain, payments on-chain, lending on-chain. It's happening. And that takes more entrepreneurs, more developers, a greater vendor ecosystem, and then it'll be extraordinary. You all are early, and then a few years from now, I think you'll be rewarded and having your caviar for performing the valuable work you're doing. The last thing we need is more modular, plug-and-play, API-based architecture and dashboards. That's a technical answer, but we're seeing this. We have primitives that are composable, so you can build more quickly. And you may have seen the OpenSea transaction invested by Paradigm at $13 billion a year and a half ago. They had 20 employees. It's extraordinary. MetaMask has 10 million active users. Coinbase has 6 million. MetaMask has less than 100 employees. Coinbase has thousands. So the ability to scale a business in crypto is tremendous. If you're not working at a crypto company, startup, community, Discord, figure out a way to do that. Give a look to CrossRiver, our job board. We're hiring product, sales, engineering, leadership, DevOps, technology, marketing, and you name it, lawyers, all the rest.
All right, and then how else can a company like CrossRiver, play its role in in this space?
Well, we want to lead from the front. We're really excited. We are unlike any other bank. As I mentioned, we're B2B2C bank, and we want to provide the picks and shovels and the tools to help bring your ideas and imagination and creativity to the forefront and make an impact and bring crypto to the next billion people.
All right. Well, thank you, Ram, and thanks everyone for joining us. Enjoy the rest of the day.
Thank you, panel. I do want to say on the next panel,